In today's Forex Midweek review, I'm sharing the latest on the DXY, the euro, the pound, and also gold as we approach some really critical levels for the Forex market. Now, before we get started, guys, if you are struggling with your trading, especially in this environment, be sure to check out the link in the description of this video for 85% off lifetime access to VIP. That includes a real-time chat, VIP-only videos, which I just put out one yesterday, and also you're going to see my trades in real time, plus you're going to get access to the complete course. So be sure to check out that link in the description below. If you're on the website, click on that Join VIP link. Okay, so looking at the Forex market here, we have the DXY looking at the monthly time frame. Now, obviously a very high time frame, but this is critical for the US dollar right now because we've talked about this here over the past few weeks. But what you'll notice is that the DXY is holding below the bottom of this channel here from 2011. So you can see that ever since 2011, the DXY has carved this really nice channel here with these lows. And currently, although it's difficult to tell with a level that goes back over a decade, right now, this level comes in right around 97.7. And we know that because there is some confluence there. Like if we take a look at the daily time frame, what you'll notice here, we've talked about this as well, but you've got this trend line here from the February high. So off of all of these highs back here, the DXY has been unable to break above this even on the daily time frame. So looking now at the current price action, you can see where the DXY is trading right around this area. So this is why I say that we are at a critical point here for the Forex market, because you can see where here on Tuesday, the DXY tried to close above this. It retested 97.7, also closed the gap here from June. And right now, the market is trading right there at that trend line. So the next 24 to 48 hours, guys, could be some critical closes for the DXY, and that's going to affect the entire Forex market potentially. So looking here at the 4-hour time frame, let's take a look at this here, because you can see some key levels that we have for the DXY to watch over the coming day or two. And obviously you've got this area up here, this 97.7 confluence of resistance. This again is a massive area for the DXY. I think that trying to buy the US dollar as it's below this area is very risky. At the same time though, even though it's below this resistance area, you could say, well, this is, a clear short for the US dollar. You've also got to be a little bit careful because this right here, okay, what we've seen since the June close, and this retest so far in July, this could end up becoming a failed breakdown from the dollar. We've seen this before. We've seen the DXY close below significant areas on the high time frames, only to go and reclaim those in a bullish manner over the next few days and weeks. So you do have to be careful with that. That is one possible scenario, like I've mentioned recently, to where if we were to see the DXY, you can see the lows back here, right off of that trend line. So if we were to see the DXY get back above here on the high time frames, I'm talking daily and weekly charts, then that would be very bullish for the DXY because it would confirm the bullish reclaim. However, at the same time, like I said, while it's below this area, you've got to be careful, and we could see some of these lower levels tested. Now, one thing here for the DXY is, first of all, we're coming up on FOMC minutes here in a few hours, and you can see where here on the 4-hour time frame, this candle back here is relatively untouched so far. So you've got support coming in down here right around 97.40. So what we could see is the DXY wick down here into this area, fill in this candle, and then from there, it's going to be critical to see what we get. Because what you'll notice here for the DXY is off of these lows, you can see that we have several lows along this area. And regardless of whether you draw it from the very low down here or, the closing price, it doesn't really matter. But what you can see here is that this right through here is going to be a critical level. So right around 97.40. But again, we could see the DXY kind of wick below this area to fill in this candle back here a little bit more, take out these recent lows, and then potentially from there get a bounce. So this is going to be a critical factor for the DXY because I think if we see a sustained break below it, then this resistance up here carries a little bit more weight, and we could see a retest down here around 97. Okay, so this is going to be a critical moment, guys, for the DXY. And what I told VIP members in the VIP only video on Tuesday is that really right now, I think that if you don't have a trade on, I don't think that this is a great time to be trading. And that's just because you can see the indecision here from the DXY, and we're seeing the same thing from the euro and the pound. Because right now, we really don't have clarity on where this market goes. Plus, we know that there's that uncertainty of Trump posting at any minute and changing the game here for the Forex market. So again, I think if you don't have a trade on, just my opinion, but I don't think that now is a great time to be trading just because of this indecision and the fact that you've got the DXY below 97.7, but also above this area around 97.40. Okay, so I think that this kind of carries over into the euro and the pound as well, and we'll talk about those here in a moment. Okay, so let's take a look next, guys, at the EURUSD. And if you are enjoying this content, if it is helping, be sure to subscribe to the channel. Also click that like button because it really does help out these videos. They do take a lot of time to make, so I really appreciate it. Looking at the Euro USD, guys, it's a very sideways market. Yes, it has been trending lower, but for the most part, very back and forth. And what we talked about here recently is the fact that even though we had a very bullish close in June, the market was also testing the top of this May channel. Okay, so this rep back here was the June close right here near the top of this channel. So what I said to start July is that we could get a pullback from the Euro USD down here towards some of these key levels. And so far we've gotten that. Okay, so as long as the Euro is within this channel, then trading within the confines of this channel also makes a lot of sense. Now, it hasn't quite tested the bottom of this channel. However, the tricky part here, and this is what I talked about recently, is that instead of just assuming that this down here is going to be the low for the Euro, the issue there is that you can see that from current levels, okay, this down here comes in about 80 pips lower. However, the challenge is look where the DXY is, right? It's still below that 97.7 level. And this is what I talked about, a few days ago in the video, is that the Euro isn't going to reach that 116.85 area without the DXY testing 97.7. So that's the issue there for the Euro in terms of the bottom of this May channel, okay? So right now, just a range bound market, you can sum this up by saying that 117.50 is going to be resistance. You've got support down here around 116.85. Okay, now this blue line down here, this obviously at 116.30 is going to be a confluence of support. This blue line down here, guys, is a single print, okay? So when you're looking at TPO, time price opportunity, what this means is that following the expansion out of this range back here, and I talked about this, in fact, a couple weeks ago, where you can see that this was the range back here for the Euro. Let me move this over here a little bit, just so it's clear. So you can see that this right here was the range for the Euro, right? And this was also technically a bull flag that we talked about at the time, but ultimately this was a sideways range for the Euro where you can see that we got the breakout back here in this area. Now, this was an expansion out of this range, and this expansion right here, we never saw a retest of this area. So following this expansion, you have an imbalance right here at 116.38. Okay, so imbalances like this, guys, tend to get filled. However, it's no guarantee that they do. But the bottom line is that market makers want as much liquidity in play as possible. And imbalances like this, following an expansion like this, following a rally like this, you get an imbalance between supply and demand, right? And so you have this open liquidity down here in this area that could become a potential target for the Euro. But the issue, again, we go back to the DXY at 97.7. You're going to hear this a lot. The DXY below 97.7 makes this a little bit trickier because you can't just blindly target this area down here, because for the Euro to get down here, it has to first of all break these lows, but also you have to see the DXY above 97.7. Now that could obviously happen, okay, but at the same time, that is going to be a massive, massive resistance for the US dollar. Okay, so you can kind of see the indecision here that we're dealing with the Euro, and it's the same thing with the pound right now, but you do have a range-bound environment. Now, we could also have the potential for this to turn into a bull flag. And, you could draw this a few different ways, guys, but ultimately this right here could kind of become a bull flag for the market. But again, the question there is, the big question mark is, will we see one more rotation lower here to clean up this single print before we potentially get a rally from the Euro, right? And that's what we don't know. But again, we do have FOMC minutes coming up here in the next few hours, so we'll see what we get from that. Now, looking at the pound, we talked about this trend line here recently too, off of these yearly highs here from 2023 and 2024. So what's interesting about this is that even though this trend line, we only have 2 touches here, which you could make the case that this is a weak trend line, but this right here was the 2023 high. This is the 2024 high. So really interesting that we have this trend line off here, off of these yearly highs. And what you'll notice is that if we go in here to the recent price action from late May and June, what you'll see here is that the pound struggled right here in this area as well. So right off of that trend line. Now we had the market break above here, and so far it has closed back below on the daily chart. Now we don't have a weekly close below here to confirm the breakdown, but so far you can see, again, these 2 daily closes here closing below that mark. Okay, so that mark comes in right here around 136.30. You can see we got the close below here, retest as new resistance. We talked about this in VIP, and you can see where we are seeing some follow through here today. The market is green, but for the most part, it's really just an indecision candle. So the other thing for the pound here to keep in mind is that during this run up, very similar to the Euro, we do have some sell side imbalances down here, some single prints. The first one at 135.09, the other one around 134.52. So these could become targets for the pound, but the issue here, the challenge here, is that you just have a very sideways market. And once again, the other big challenge here is that the DXY is below 97.7. Okay, so it's very difficult to try to short the pound, because if you're shorting the pound, you're also buying the US dollar, right? And if you're doing that, then you're essentially buying the DXY into this area. And I mean, again, sure, it could break above, but right now it is a massive resistance area for the US dollar. So again, guys, challenges all around. You've got the market holding below 136.30. So buying the pound, in my opinion, is ill-advised while we're below that. And at the same time, trying to short this is also tricky because you've got the DXY below 97.7. So you can kind of see where this is going. Once again, we're kind of at a crossroads here for these markets to where I think that, again, just my opinion, but I think that if you're looking for something to do right now is probably a good time to stand aside and protect your capital. But we do have, again, those sell side imbalances where if we get the move lower, those could become targets for this market, with this one down here becoming support. Now, one last thing too to keep in mind is that lower imbalance down here around 134.52 comes in very close to the trend line here for the pound off of the 2025 low. So you can see 2025 low down here. We've got a couple touches back here. We've got this low right here, and this level comes in very close to that lower imbalance. Okay, so keep that in mind as well, that if we were to get the rotation lower, this down here becomes a big test for the pound. Okay, so a lot to consider, even though markets are sideways. I think that, look, here's what I'll say, guys. I think that markets are very indecisive right now, but I think that over the coming days and potentially week or two, we are going to have some really nice setups here for these markets. Now, I personally, guys, I would love to see the DXY reclaim 97.7. I'm not saying it's going to happen. I'm not saying it's likely right now because it is resistance, but I would love to see a reclaim up here on the high time frame simply because my trading style, guys, if we get a reclaim here, I know that confirms a very bullish reclaim for the dollar. And I think that we have some really nice opportunities if that happens. Again, I'm not saying it will happen. We'll have to wait and see, but that would be, in my opinion, for me at least, that would be the ideal scenario. Now, looking at gold, okay, let's wrap up here with XAUUSD. And the weekly time frame, we talked about this before, but this trend line here off of these lows, right off of those 2025 lows down here, you can see where we did get a weekly close below. Last week held below it as resistance. So we talked about this in VIP as well, and I think that anybody trying to get long on these two daily closes, we talked about this in the weekly forecast, but if you move this level lower off of the low back here in May, what you'll notice is that we did get two daily closes above here. However, the issue there, and again, this is the benefit of being in VIP, is that the weekly was holding below. The weekly was holding below this entire time. So trying to buy these two daily candles was always going to be ill-advised. Now, looking at the recent price action, all right, let me explain what's happening here. We talked about this yesterday, but in case you missed the video, we'll recap it again. So this hourly time frame, we've got gold moving within this descending channel. So lots of lows off of this area. This is where gold was coming off of yesterday when I talked about it. And I said that a rally from down here in this region, seemed likely with the market coming off of that support. Now, obviously very sideways here over the past 24 hours. However, the key here for gold is that you've got this area up here, which you have a buy side imbalance that gold's getting very close to now at 33.17. Again, these tend to be targets, especially in a range-bound market like this. And you've also got the 6-day composite value area low. I know it's a mouthful at 33.22. So what that means is when you're looking at TPO, okay, so I'll just bring this up, in fact, while we're here, looking at TPO here on the 30-minute time frame. So bear with me if you're not used to this. It might look like a bunch of spaghetti on a chart, right? But if you take these profiles, these days here, okay, all these blocks, what this shows you is the amount of time that a market spends in a certain area. So the bottom line is if you were to take all of these together here over the last 6 days, because it has been very, sideways, if you take those 6 days, this right here at 33.22 is the value area low. The value area low means that it's the lower portion, the bottom range of 70% of the trading activity for those 6 days. Okay, so the bottom line, guys, is this 6-day composite value area low here at 33.22 is going to be very critical as a resistance area for gold. Okay, so you've got that imbalance at 33.17. You've also got 33.22 as that 6-day composite. Okay, so again, we talked about all this in VIP as well. So, if you're not familiar with TPO or how all that works, you can join us in VIP there. Check out the link in the description of this video. All right, so for gold, guys, this area up here is going to be resistance. Obviously, no guarantee that we do get a rotation lower from there. But at the same time, you've got to respect the chart, right? And respecting the chart means that looking here, and I see a lot of people posting about gold or bullish about gold, and it could turn bullish. But at the same time, you've got to respect the fact that gold has been in a downtrend now for the past 3 weeks, okay? Furthermore, you've got this descending channel here on the hourly, and you've got this confluence of resistance up here around 33.22. So as long as this is the case and gold is making these lower highs and lower lows, then I'm going to be looking for lower prices down here, potentially toward areas like 32.50. Okay, so potentially, if we get the retest up here in this area around 33.20, get some bearish price action up here, it's going to be important to watch the price action in this region to see if we are likely to see that rotation lower or not. But if we do get that, guys, then, areas like this down here, this recent low around 32.50 become kind of the obvious target over the next few days. Obviously, if gold were to retest this area, pull back, and then break out and base above here, then that, of course, would be bullish towards some of these recent highs. All right, so it's really that simple. But again, 33.20 for gold, guys, is going to be a big resistance area. Okay, so obviously one big factor here for gold too is what the DXY does, because they tend to be inversely correlated. So today we're seeing the DXY pull back. No surprise that we're seeing gold come off of these lows. All right, so what the DXY does around 97.7 is also going to be a major driver for XAUUSD and what we get when if the market retests this area around 33.20. All right, guys, I hope this video has helped. If it has, be sure to subscribe to the channel. Also click that like button. Don't forget to, if you're struggling with your trading or you just want help with your trading, be sure to join us in Discord. See the link in the description of this video for 85% off. You're going to get real-time chat, the course, 2 VIP-only videos, trade setups, and also see my trades live. Be sure to check out that link, guys. Trade well out there, and I will talk to you again tomorrow.